A dealer in foreign exchange has the following position in Swiss franc on 31st of January 2018. Credit balance in Nostro account $1 lakh. Opening position overbought $50,000. The transactions have been provided to us. Purchased a bill on Zurich. In a simple language, we understand this bill discounting. Sell forward telegraphic transfer. So there is a forward transaction in which the transaction is entered upon for sale. Forward purchase contract cancelled means earlier we might have entered into the transaction for the forward purchase, now it is cancelled. Remitted by telegraphic transfer. It means that say we understand that the payment is made for import. Draft on Zurich cancelled, so the draft is cancelled. Examine what steps would the dealer take if he is required to maintain a credit balance of 30,000 Swiss franc in the Nostro account and keeps overbought position on the Swiss franc 10,000. That is the question. Try to complete the answer on your own. Let us start doing answer. Suppose that is a dealer in foreign exchange has the following position in the Swiss franc on 31st of January 2018. Balance in the Nostro account credit 1 lakh Swiss franc. So particulars, debit balance and credit balance. So your opening balance is credit 1 lakh Swiss franc. Opening position overbought. So we understand that's the purchase and sale. Opening balance overbought 50,000 Swiss franc. The question is providing the information that say purchased a bill on Zurich. It means that's the bill discounting. As far as the bill discount is concerned, so from customer point of view, the transaction is sell of Swiss franc and let us say it is purchase of rupees. So from bank point of view, the transaction is sell of rupees and purchase of Swiss franc. So over here, bill discounting an amount of 70,000 and it will have the effect only in the exchange position, not in the Nostro account. Next, sold forward telegraphic transfer. So we understand that over here directly the transaction is provided to us, that so the sale forward TT sale forward telegraphic transfer an amount of 49,000. Since it is forward transaction, so it will not have the impact in the Nostro account. Forward purchase cancel. So cancellation of forward purchase. So it will come on the sale side now, because when the purchase was entered upon, it must have been shown in the purchase column. Now it is required to be shown in the sale column. Remitted by telegraphic transfer an amount of 75,000. So remittance by telegraphic transfer 75,000. So over here remittance by telegraphic transfer 75,000. This is what we understand. Next, draft on Zurich cancel. So the draft cancelled So from the bank point of view, it is sell of rupees and purchase of Swiss franc. That is an amount of 40,000. This is the way we will have the exchange position. The question is providing the information that what steps would the dealer take, that is the bank will take, to keep a credit balance of 30,000 Swiss franc. So always whatever the balance that you have to keep in the Nostro account is important. So here it is 1 lakh. Over here it is again 1 lakh. So it is 25,000. This is the closing balance, which is 25 and you require 30. So what you have to do, you have to enter into the spot transaction of purchasing 5,000 Swiss franc in order to keep a balance of 30,000 Swiss franc, comma, purchase 5,000 Swiss franc in spot transaction. Full stop. In bracket write down 30,000 minus 25,000. Okay. Now as far as the exchange position is concerned, you want to have overbought position of 5,000. Fine. Kindly use a calculator. 50,000 plus 70,000 plus 40,000. That comes to 1,60,000. 49 plus 41 plus 75. It is 165. Okay. So 1,65,000 is more than 1,60,000. So there is oversold position. That is $5,000. This is what we understand. Now there was oversold position of 5,000. However, by purchasing this 5,000, it goes down to 0. Okay, 5,000 was, so the oversold, you purchase 5,000, so the balance goes down to 0. If at all you want to have overbought position of 10,000, then in that case, again you have to enter into the forward contract for purchasing 10,000 Swiss franc. We understand that's the reason for entering into the forward contract, because it will not have the effect, say, in the Nostro account, and it will have effect only in the exchange position. So write down with paragraph. By purchasing Swiss franc 5,000 in spot transaction, comma, exchange position will be 0. Full stop. Now to have overbought position of 10,000 Swiss franc, comma, enter in forward contract to purchase 10,000 Swiss franc so that overbought position will increase to 10,000 Swiss franc. So this is the way the Nostro account in exchange position is required to be prepared, and we are required to write one line answer like this. This is what you should do in order to keep the desired balances.